So PCE was actually a bit hot. Stocks are up. Debt ceiling wasn't solved yet. Next week starts the last month of the first half. So what should investors brace for with that setup?
So I think the North Star for all investors should be earnings. I think that's kind of been the story of this market for the last several months, and it's still, I don't think, appreciated enough. I know NVIDIA this week was a huge blowout, but aside from NVIDIA, going back to the Q1 March end quarter companies and now with the April end quarter companies, there have certainly been a handful of disappointments, but in general, I think corporate America continues to outperform expectations, and that to me is still the single most important driver of why stocks have been so resilient now, for the last several months. The PCE definitely, creates some complications for the Fed. You had yesterday's data, also the weekly claims, and then the Q1 PCE was revised higher. That's going to complicate life for the Fed a little bit as we head into the June meeting. We get a lot of data next week. It's JOLTS, you get the ISM, you get the jobs report on Friday. That will play a big role into what happens at the June meeting. I do think that the Fed, the bar for incremental rate hikes is very high. You still have a lot of tightening that's occurring right now in the market. That 500 basis points of hikes in a little bit over a year, ongoing quantitative tightening, the ongoing fallout from tightening bank lending standards. So the Fed, I think, wants to wait and see how all that plays out. But the data next week, I think, will be very important at what happens at the June meeting.
Although we should note, Loretta Mester was very hawkish on our air just earlier today. We have had a number of officials who've come out and basically suggested that maybe next Fed meeting is potentially a live meeting if we continue to get this stronger than expected data. The fact that we closed at 42.05, how significant is that when we start getting into technicals, Adam?
I think the 4,200 level was watched very, very closely. It's still watched very closely. I think people will want to see if we can sustain here for a couple of days to see if this isn't just a head fake fluke. But you definitely saw, I think, starting yesterday and certainly today, the psychology of the market is definitely shifting. There's a lot more, quote unquote, FOMO type of behavior where people who had been skeptical of the market are now turning around and chasing certain sectors. You're seeing it, to a big extent within technology. But this 4,200 level, I think, was very important.
Speaking of technology, let's get into AI a little bit. I think some people might be missing that in these transitions, most companies don't benefit meaningfully. Like there's some that go up a lot, but they're the exception to the rule. If you think about who really won in the smartphone transition or who really won in the cloud transition, it wasn't everybody. So is there, when you look across all of the different excited reactions here, is that because some companies were undervalued up to this point, or is there some euphoria perhaps moving into some of these stocks, you think?
I think there's a lot of euphoria moving in. I think NVIDIA was very real and legitimate. The guidance from that company is spectacular. They own this critical chip market right now that is absolutely integral to what's occurring with AI and these new technologies that are being rolled out. But as far as extrapolating that to the overall semiconductor industry and even all of tech, I agree. I think there's a lot of enthusiasm. I think the more important semiconductor report this week, if you want to extrapolate to the broader industry, was Analog Devices, not NVIDIA. NVIDIA is a very company-specific, unique story. Analog Devices has very broad exposure, and the guidance from that company, the tone from that company was certainly a lot more cautious than it's been. And I think that is the more, again, the one you should be extrapolating to the rest of the industry. As far as the technology for AI and the GPUs people are buying, it's almost table stakes right now. It's a requirement, I think, for most companies just to maintain their current competitive position. Marvel last night was very, very bullish and enthusiastic, but you're talking about the AI part of the business is less than 10% of revenue this year, and that's after it's going to be doubling. So just to keep it in perspective, we have another big week of tech earnings coming up. You're going to have a lot of companies come out and explain why they are also AI plays. But I think it's just important for investors to keep it in perspective. NVIDIA is very real.